It's time now for your Sunday Money. Most of us realize that personal savings are important for our financial stability. Along with traditional bank investment accounts, there's also a way to save and invest through the ABLE account. And Suzanne Himes from Asset Planning Corporation is here to help explain how ABLE accounts work and who can benefit from them. Suzanne, thank you so much for being here today.
Sure. Thank
awesome.
you.
So let's talk about ABLE accounts. I told you before, I don't know much about this, so I'm glad you're here to explain it. So I guess they're not super well known. Tell me a little bit about it.
Yeah. So ABLE accounts were just created 5 years ago, so they are relatively new. And these are tax-free savings accounts specifically for individuals with disabilities.
Okay.
So the purpose really is to kind of ease some financial strain by providing savings accounts that can be used in conjunction with other benefits, to supplement other benefits, which is the key difference there. And the funds in an ABLE account can be used for really a wide variety of disability-related qualified expenses. So everything from housing and transportation to health care to assistive technology, other personal services. So really a lot of flexibility there for folks.
Yeah, well, it sounds like it's really a huge, I mean, you can see the list right there. We just had it up.
Yeah.
A lot of different things that you can do with it. So who is able to have these ABLE accounts?
Right.
Who is eligible? See what I did there?
Exactly. I saw what you did there. So the key to eligibility is that an individual must have a disabling condition prior to age 26. That's the key. And then if you meet that test, and you're also receiving benefits like supplemental security income or disability income, you're automatically eligible to open an ABLE account. And if you're not receiving those other benefits, you can still qualify. You just need a doctor's certification for that.
Gotcha. Okay.
Yeah,
and then how do these accounts work? I guess there's probably a lot of money moving around, that kind of thing.
Yeah.
So it's good to understand at least the basics.
Yeah. So the first thing, an individual can open an account. There's over 40 ABLE accounts throughout the country. And it's important to remember you can only have one ABLE account at a time, but you can transfer from one to another. If you opened up one and then on down the road you say, oh, that program has a feature that is that I really like, you could transfer to that. The next thing is that anyone can contribute to an account for someone. So not just the account owner, of course, but family, friends, employers, a trust could transfer money. You can even transfer from a 529 college savings plan that might have been opened up at some point for that individual. So lots of good stuff there. The next thing that's really important to remember about all those contributions is that annually you have a $15,000 limit, which is a pretty hefty sum.
Yeah, I mean, that's good enough for me.
Right, that's right. And if the account owner is working but not participating in their employer plan, they can actually contribute even more in addition to that $15,000.
Awesome.
And then finally, the key to all of this is that balances up to $100,000 are not going to negatively impact eligibility for other federal means-tested benefits.
Gotcha.
So that's the key difference really between an ABLE account and just having some other kind of savings account.
Awesome, Suzanne. Really appreciate it. And really quickly, if you want more information on ABLE accounts, we've got those websites up there. Hurry up and write those down, abletn.gov. Pretty easy to remember. You can find out more there. So